Are you out of rental income? What can you do to protect your properties from facing a foreclosure? That's the topic for today's episode, and without further ado, let's dive in. Hello everyone, and welcome back to another episode. For those who are tuning in for the first time, this is your channel for real estate education. So today's episode, it's also a continuation from what I covered last week about the CARES Act and what you can do in this difficult situation to navigate through your finances and put a plan in place so that you can protect everything you worked so hard for. So today's episode is dedicated exclusively for property owners, from landlords who are actually facing a difficult time, and you're trying to find solutions to see how you can actually get access to funding in order to protect your real estate investment. And today's episode, it's full of information. So rather than doing the usual teaching in my Blackboard, what I'm going to do is to dive straight into my computer and share that information with you. So see you inside. Okay, and here we are inside of my screen, and as I mentioned in the introduction and also in my prior episode, this portion of the video will be specifically for real estate investors and for business owners, right? If you're interested in checking out the episode where you can get assistance for yourself individually, there will be a link down in the description below for you to check it out. But this episode in particular will be just for, like I said, small business owners or real estate investors. So without further ado, let's dive into what I have to present. So what is a small business, right? Why do I keep talking about it? So this concept is actually very important because it's going to set the tone for what you can qualify or you cannot qualify. So per the Small Business Administration, the small business is any business who employs 500 people or less. So this doesn't have anything to do with how much money you make. You could be making millions of dollars, but the concept of what constitutes a small business is any business, whether it's your real estate portfolio or an actual active business, as long as it employs 500 people or less. And now that we've gotten that straight up, so let's move into the legislations, and that will be the CARES Act, right? So for those who have heard about it but don't know exactly what that means, the CARES Act stands for the Coronavirus Aid, Relief, and Economic Securities Act, and that is not to be confused with the Families First Coronavirus Response Act, which was passed 2 weeks prior to the CARES Act. They're not exactly the same thing. Why? Because the Families First Coronavirus Response Act was put in place to help out business to provide paid leave, right? That is sick leave or people who have to take off due to the coronavirus. Now that we've gotten that clear, let's just move on to the next slide. So this piece of legislation, the CARES Act, it's extremely long. There's a version with 880 pages. I got a hold of the version that has 335 pages. I think it's exactly the same thing, only in smaller fonts, and they have multiple sections in there. But for this episode in particular, we're going to cover two of them. One, Keeping Americans Workers Paid and Employed Act, and the Assistance for Americans Workers, Families, and Business. Now, let's talk about the Business Administration and what role it plays in the CARES Act, right? So for those who don't know, the overall concept or the overall definition of what the Small Business Administration does is that they're here to aid, counsel, assist, and protect the interests of small businesses to preserve, maintain, and strengthen the overall economy of the nation. And the CARES Act, it's working in conjunction with the SBA to provide assistance, to provide financial assistance to help small businesses or real estate investors, because remember, I mentioned it multiple times, right? You have to run your real estate portfolio like it is a business. So those small business loans are a business loan. They're not a personal loan or a grant. What does that mean? It means that this assistance is not part of the personal help that you'll be receiving. Like I said, if you're interested about personal or individual help, I'm going to leave you the episode in the description box down below so you can check those out. But this is strictly for businesses. Now, Let's move along and start with one of the many programs that the CARES Act has to offer. So the first one on the list that we're going to cover today will be the Economic Injury Disaster Loan, also known as EIDL, right? And so what can you do with EIDL? You can borrow up to $2 million for your business. And again, I cannot emphasize enough, once again, you have to run your real estate portfolio like it is a business, right? And how do you do that? Meaning you have to put your properties inside of an LLC. You have to run everything like it is a business, right? So we're talking about having your operating costs, having all of your receipts, declaring all of that rental income through your taxes, and having the ability to properly show that your rental business, it's an actual business and not just some kind of hobby, because no offense, but it's basically how the IRS sees it, right? So if you're not declaring your rental income and you have no way to prove that it is in fact a business, you're not going to qualify for these loans. You will still be able to qualify for any individual assistance like I've shown you in the prior episode, but not for this type, right? And if you already have a active business, then you have to demonstrate your ability to run a business, right? By that, I mean having your proper tax returns for your business, having the ability to show your cost of goods sold, having the ability to prove that you actually have to pay for the rent of your physical location for your business, utilities, and anything that is involved with the cost of running a business. So now back to the presentation. Once again, you can borrow up to $2 million, right? And you can qualify for $10,000 in advance. It's a grant, right, that the SBA advance you up to $10,000, and you can get that within 3 days of the application. Now, that's what the SBA promises, but in my conversations with my power team, the SBA is actually taking longer than 3 days because, as you know, we are in the middle of a crisis and a lot of people are trying to get access to those type of loans. So if you already apply for this type of loans and your cash advance is taking more than 3 days, please be patient. They are understaffed and they're overworked. And if you haven't applied yet, now you know to be patient with them because they have been swamped with a lot of applications from different businesses. So just, be mentally prepared that you won't hear from them within the first 3 days or so. And this type of loan is forgivable. And what does forgivable mean? It means you can get access to the $10,000, and as long as you can prove that you're using it for what it's intended to, then you don't have to repay it back. And how do you know you're using it as intended? Don't worry, we're going to get to it in a little bit, right? So once again, the EIDL, it's a loan, right? It's a loan from the SBA. So therefore, there are interest rates that come with it, right? For small businesses, you will be paying at 3.75%. If you're running a nonprofit, then the rate is lower. It's actually 2.75. And what could be an example of a nonprofit? Think of it as a church, right? So the church still needs to make money. They collect money through donations because that will help maintain the structure of the church. That will help them get basically their supplies, right? Candles. It's going to help them pay for the utilities, right? Because they still need to have electricity inside the church. So that's just to get you an idea of what example could be a non-for-profit organization, right? So moving along, the term of that loan is up to 30 years and payment can be deferred to 6 months or 1 year, right? So that depends on what you qualify for. And what's the meaning of deferment? It just simply means that, hey, let's assume that you qualify for that loan and you have a total of 6 months or 1 year where you don't have to worry about repaying it because the SBA, the government, is giving you a break so you can take care of basically surviving with your business. And then once the storm has passed, once you have taken care of everything that you need to take care of, then you can start worrying about repaying that loan within 6 months or 1 year at the rate that I previously covered. Now, for this type of loans, you won't need to provide any type of collateral, right? As long as it's less than $200,000. Anything exceeding $200,000, you will have to provide some type of collateral. What type of collateral do you need? I don't know, because that will depend on your business. So it is very important that you get that clarified if you're planning to apply for over $200,000. If it's anything less than that, then you don't have to worry about that, right? And who is eligible, you might be wondering. So the eligibility applies to all businesses business, once again, including nonprofits, veterans organizations, tribal business, sole proprietorships, self-employed individuals, and independent contractor with 500 or fewer employers. And like I mentioned in my prior video, an example of a self-employed individual could be, let's say, for example, nannies who work for themselves, or anyone who files for a Schedule C while they're filing their taxes. And a good example of independent contractors are Lyft or Uber drivers, right? So you work for a company, but you don't necessarily receive benefits from them, but you work for them under their umbrellas. So that makes you an independent contractor. So moving along, right? And what is the use? Remember here in the prior slide, I talked about not having to repay the loan, meaning the 10,000 grand is forgivable as long as you give it the use that you're supposed to give it. And here's what I'm covering that. So you can use that money to cover fixed costs. We're talking about rent, we're talking about utilities, any office supplies. You can use that money to pay payroll, right? So let's say, for example, the salary of your staff, whether you manage to keep them all on a full-time basis, or even if you reduce them on a part-time basis, you will get access to that capital in order to cover payroll expenses or any type of bills that you cannot pay due to the disaster. So let's say, for example, you have a restaurant, right? You will probably place orders for fruits, vegetables, and meat. And now, unfortunately, you won't be able to pay your vendors just because, you have to close down your business depending on the state that you are. Some of you might still be available to do delivery, but some of you are completely closed down, but you still have that responsibility. You still have those bills that you have to pay out. And therefore, you can use this money to pay any bills that you cannot pay due to the impact of the coronavirus, right? Now, the funds, once again, are provided directly by the SBA unless they are transferred to an SBA lender. And we're going to talk about SBA lenders in a little bit. And if you're interested, if you definitely want to apply, I'm leaving you here 2 links, right? So here's a link for you to gather more information, and then here's a link for you to actually access the application. And here we are, just to give you an idea of what to expect. Economic Injury Disaster Loan, Emergency Advance. This loan will provide up to $10,000 of economic relief to businesses that are currently experiencing temporary difficulties, right? The goal with this $10,000 grant is to get you access as fast as possible so that you can meet your financial responsibilities and then apply, normally and wait to get an answer for, anything else that you can qualify through them. But the goal is to get you this instantly or almost instantly so that you can meet your financial responsibilities. So here's the overview and the eligibility. So feel free to read this at your own time and see if your business can actually meet that criteria. And then once you're ready, then you can check out the other link that I included in the presentation, and you can go ahead and just simply file the application right here and, keep your fingers crossed and hope for the best and hope that you can actually qualify for those benefits. Now, back to the presentation, you have 2 choices to access this link, right? So one, I can actually include that in the description box, or you can actually access another link that I'm going to provide you down in the description box so you can get access to this presentation, so you have all that information handy, and that way you can actually, refer to it whenever you need to in order to learn more about the differences between the different type of assistance that has been provided by the CARES Act, or you can just simply watch this video over and over again as long as you need in order to get everything clarified for you. So now, moving along, the next program that the CARES Act is offering is the Paycheck Protection Program. It is popularly known as PPP or 3P, and it's also an SBA loan, right? So what does the PPP has to offer, right? So basically, the federal government allocated a total of $349 billion for this program. And the goal is to provide businesses with the fund to cover payroll costs, right? And in a minute, we're going to go over the definition of what they see as payroll costs. And the money is available until the funds run out. So the faster you do this, the better. Don't waste any time. Go ahead and apply right now, right? So what exactly it's included in payroll costs. So in this case, for the PPP program, we're talking about salaries, we're talking about wages, commissions, or any cash tips that could be added to, your employees. So for example, bartenders, they get a lot of cash tips, right? Now, it also covers pay leave for vacation or sick leave or medical leave, right? So we're talking about people who probably got hit with the virus, or maybe they had a family member that was impacted by the virus. Parents, for example, they have to go home home and take care of the children. So it's meant to cover all of that. It is also meant to cover healthcare payments, right? For those who have a business that includes insurance premium for your staff. And it's also designed to help you cover 401k payments. So once again, if you are a real estate investor watching this episode, I am sure you have people that will probably work for you, right? So for example, one of them could be your property manager, although property managers are usually independent contractors, but you probably have a go-to person under your payroll, maybe an assistant that helps you pick up the calls, or maybe an accountant, or maybe a bookkeeper. So any salary that you pay out, you can actually use this fundings to cover that as well. So back to the presentation, the payroll cost also includes payment of state or local taxes for compensation for employees. So for those who already have a small business or are running your rental portfolio like it is a business, you'll realize that every time you pay your staff, you have to worry about taxes, right? You have to contribute to their taxes as well. And then part of that pool includes federal, state, or local taxes. For example, New York State has all three. New York State has to contribute federal, it has to contribute to the state of New York, and it has to contribute to New York City as part of their local taxes. So this will include the state and local tax, but will exclude the federal tax. So what exactly is not included as part of your Paycheck Protection Program? So any compensation or salary in excess of $100,000, right? So you can go ahead and contribute to people's salary, contribute to your staff and your team, as long as it does not exceed $100,000. So $100,000 is the cap, right? It doesn't include tax credit for sick leave or family leave under the Families First Coronavirus Response Act. Why? Because the IRS doesn't want you to double dip, right? This doesn't include federal employment taxes, and it doesn't cover any compensation for an employee who is not a resident of the US. So I know a lot of businesses have been taking advantage of outsourcing. Maybe you have a staff member who is working in India or somewhere in South America. So this type of assistance does not help you cover their salary or any payment that you issued them, right? And it doesn't cover any payment to independent contractors. Why? Because they can actually apply for it themselves. What else is included in the Paycheck Protection Program? Once again, it covers independent contractors, it covers self-employed, it also covers sole proprietors. So the CARES Act created the PPP with the intention to have you use the money to, once again, cover payroll costs, including healthcare insurance, any interest on mortgages or rent that you have in place. I know a lot of you have brick and mortar businesses, meaning you have a physical location, like for example, restaurants, right? You have to pay for the rent of the place, or perhaps you probably bought the property. Now you have to worry about covering a mortgage and any interest that derives from it. So this is intended to help you cover that. However, one key thing for you to know is that your business has to be up and running and operating before February 15th. With that, I'm saying only existing businesses can qualify for that. You can't come in, let's say in April, and let's say, you know what, I decided to open up a business, so let me apply for this type of assistance. No, it doesn't work that way. You have to have an existing business and have the ability to prove that you have been impacted by this disaster, right? And how do you prove that? It's just very simple. You can share your bank statements, you can gather any financial statements that you have put together, and just prove that there has been a slowdown in sales. And some of this can be even local, right? Like it's no news that certain states have been issued a complete lockdown. So for example, New York is actually one of them. So it should be relatively easy for you to be able to evidence that. So back to the presentation. So the loan, it's also designed to help you cover any utilities in place. By that, we're talking about electricity, any internet, in the event that you're taking your business online. So let's say, for example, if you're doing deliveries and you're taking orders online through GroupHub or whatever other site that you're leveraging, then you also have to, cover the internet. So that's meant to help you cover those type of expenses. And once again, your business has to be, or the service, better said, has to be in place before February 15, or any interest in any business that has been incurred before February 15. So let's say if you have a prior SBA loan, so if you have any business credit card debt that you have to cover, or maybe any vendors, any services that you have incurred before. Let's say, for example, you hire a photographer to do some marketing campaign for your business, and now you're unable to pay them. So all of that, as long as it takes place before February 15, then you should be able to take advantage of this loan and be able to cover those expenses. So the good thing about this type of program is that for the PPP, you will not need any collateral or personal guarantee, and the payment is deferred to 6 months. Why? Again, the SBA or the government is probably figuring that, hey, it will take approximately about 6 months for these businesses to get back on their feet. So let's just cut them some slack and give them a break and let them use the funds and take care of any obligation that they have. And then we'll worry about getting that money back 6 months after the fact, right? And again, if you're using this money for the intended purpose, the interest will continue to accumulate, but the principal part of it is going to be forgiven. So let's say, for example, you qualify for $200,000. If you can prove that you are using the money as intended, then you don't have to pay back the $200,000, but whatever interest accrues, whatever interest accumulates on the $200,000, that you will have to pay, right? So make sure you keep your proper records, you have proof, so that way you can evidence that you've been using the money digitally just as if it was originally intended for you to use, right? And the interest rate on the loan is 1%. Although I've been hearing a lot of mixed messages. I know initially they had a certain rate, and then when I sat down and talked about this with my power team, the information as of that day, which was April 4th, I heard that the rate for this loan was 1%, but once again, that could change. And the term, it was originally issued for 10 years. Now they had made an amendment, they had made a correction, and now the term is 2 years. And again, that could change as well, but this is information that was updated as of April 4th. And again, if you're watching this video at a later time, the information might have changed by then. But as of April 4, the rate is 1% and the term is 2 years. And if you're curious about who is providing those funds, once again, the fund is provided by the SBA, but they're working directly with approved lenders. So in order for you to apply for this type of program, you're going to have to work directly with the lenders. So one of them is actually Chase, another of them is Bank of America. And based on conversations that I've been having with my team, Chase and Bank of America are prioritizing the customers that they already have in-house, customers that already have a relationship built with them. Why? Because they're pretty nervous about everything that's going on, and they want to make sure that if they're going to give you a loan, they want to have some type of relief that you're going to be able to pay it back. But that prioritization for Chase and Bank of America could possibly change, because I read this morning, and it's April 6th today, I read this morning in the paper that Bank of America is being sued for discrimination because they're prioritizing existing customers and they're denying assistance to other businesses who are in need of this help. So just be on the lookout. If you have an existing relationship with Chase and Bank of America, great, go ahead and work with them. But if you don't, here is a list of other banks who are actually providing that type of assistance. In fact, I'm actually going to go ahead and open all 4 links so you can sort of like see what they look like. So we have Chase. This page was last updated as of April 3rd. And here is the COVID-19 business update. We're here for you. Here's the message. And you can learn more here and apply for the program and see what is it that they're requiring you to do and how you can actually apply. So feel free to go over the list of criteria and go ahead and apply. And if you are banking with Bank of America, so here is their website as well. Feel free to go over that and just hit on the apply now button. If you, again, don't have a relationship with either Chase or Bank of America, here is a link of existing lenders that are issuing the PPP program. So you have 21st Century Bank, America First FCU, and the list is pretty extensive. So feel free to go over that list right here. And if you cannot find a lender that is nearby you or one that can help you, you can still access the SBA website and find eligible lenders. You can actually go ahead and just type in your zip code here and they're near in the box, and it should be able to pull up a list so you can find any lender that is nearby you and make this process easier for you. Now, back to the presentation, right? what is the eligibility? What criteria do you need to meet in order to qualify for this? And this is pretty similar to the EIDL, right? This type of assistance is provided to all businesses, including nonprofits, veteran organizations, tribal business, sole proprietorships, self-employment individuals, and any individual contractors, as long as you have been in business as of February 15. So February 15 is the cutout date. What are the exclusions? Any business that is engaged in activity that is considered illegal under federal, state, or local law. So, for example, marijuana is one of them. Any household employers, like, for example, nannies. Why is excluded? Because they can apply for it themselves, right? So, therefore, you're not qualifying for money, so you can pay your nanny. Your nanny can go ahead and apply for it herself or himself. Any business that contains a 20% of ownership by someone who's under a felony or under indictment, or if you have defaulted or delinquent on an SBA loan within the last 7 years. And how is the amount determined, you'll probably wonder. Well, the maximum amount is 2.5 times your average monthly payroll expenses. And if you're wondering, well, why 2.5 and not 3.5 or 7.5 or 8, whatever the amount is, they are thinking 2.5, that's the equivalent of 2.5 months. They're thinking that 2.5 months should be enough of a help to get the businesses up on their feet and help them to be able to afford their expenses. Guys, you have to understand, this is the largest financial support package in history. And in comparison to the 2008 bailout, this is for the people. This amount of funding is for the people. They're not bailing out banks. They're not trying to save them. And in order to prevent the economy from collapsing, this time the government is signing an act to help people, regular people like you and I, who are waking up early every day to push forward and to, contribute to the economy through our businesses. So this is a great advantage. This is a great help. So if you do qualify, please do not let go of this amazing opportunity. So back to the presentation, how is this amount determined? So I have an example here for you. So let's say the amount of your gross wages, and those who don't know what gross wages mean is anything before taxes. So gross wages, let's say $75,000, you contribute $10,000 to your staff health insurance and perhaps $7,500 to the retirement benefits, right? So the sum of all of the above is $92,500, and you're going to take that number and you're going to divide that by 12. That will give you an average of $7,708.33. So your eligible amount is that number times 2.5. So you're going to receive $19,270.83. Okay? So now moving along, what if you don't qualify for any SBA loans? And I have good news for you. The CARES Act still offers assistance outside of the SBA. And one of them is the Mortgage Forbearance Program. Now, this is not to be confused with mortgage forgiveness. You're still wholly responsible for what you owe in your mortgage. What mortgage forbearance means is that you are getting the opportunity to pause or reduce the payment of your mortgage for a limited period of time due to the impact of the coronavirus. You will still have to make your payments in the future. Personally, I'm not a big fan of this program. If you can do your very best to qualify for EIDL or PPP, go for it. There are other methods like using business credit card, but personally, I am not a big fan of mortgage forbearance. So if you can keep making your payments, keep making them. Why am I not a personal fan? Because your interest will continue to accrue. Even though you are having the opportunity, quote unquote, to pause or reduce your mortgage payment, the amount of interest that you're going to accumulate over a period of 1 year or 6 months, it's a lot, right? So let's say, for example, I have 2 examples right here that are going to help you walk through that, right? So let's assume that you owe $100,000 in 1 year. And you continue to make your payments. And let's say by year 2, you have reduced some of your debt. And by then, you will owe $90,000, right? And on a second example, let's say you owe $100,000 a year, right? And you took the forbearance and you decided to either pause or reduce payment, whichever the option is it that you're getting. And by year 2, you will possibly either owe $100,000 still if you decided to pause the mortgage payments, or maybe $99,000 if you decided to reduce payments. Now, in terms of mortgage interest, do you prefer to pay your mortgage interest on the $90,000, or would you prefer to pay that on the $9,900 or the $100,000? I am pretty sure you will much rather pay interest on the $90,000 and not on the higher amount. And that's in essence what it comes down to. Yes, it will help you if you really have no other means to get through this and you really, really have to pause. Otherwise, you will end up in foreclosure and they will be taking away your property. That will be the only way. But if you can, if you definitely qualify for the other type of assistance, try to do that. You will much rather pay a 3.75 or a 1% on an SBA loan than whatever loan you have in your mortgage, unless you got a pretty good deal with a low rate. But other than that, try to get through this. Try to pay your mortgage if you can, because you wind up paying more money in the long run. So moving along, things work very differently in terms of mortgage forbearance, because things could change depending on whether you have a private loan or whether you have a government-backed loan, right? So what exactly is a government-backed loan? So it's anything that is an FHA, a VA, USDA, a Fannie Mae or Freddie Mac loan. For any government loan, you can actually pause the payments, right? And you have the right to request forbearance for up to 180 days. And after that, you have the right to request an extension to an additional 180 days. And that's for single families. Now, if you have a multifamily, then the forbearance can be requested up for 30 days with 2 additional 30-day periods for a total of 90 days. Now, once again, the options for private loans differ and they can each dictate what the terms are. So it will be very difficult for me to try to guess what each of the lenders out there has to offer. So for that, you will need to contact them to find out. Please be patient, because lenders have also been swamped with a lot of phone calls. They are also understaffed because people might have taken sick days, or they just completely quit because they don't want to expose themselves. Some of them are probably working from home, and when you're working from home, it's not the same bandwidth as if you are actually working in an office space with high-speed internet. So please be patient. I have actually heard of people who have stayed on the phone for at least 4 hours in order to take advantage of that. So please, please, please do not lose hope. Just reach out to them to see what your options are. In order for you to get access to this type of assistance, you must contact your lender directly or your loan servicer directly. And what is a loan servicer? It is basically the company that sends your mortgage statements and manages your loan. Why am I making an emphasis on either or? I'm sure that some of you might have seen that, let's say, for example, you probably closed the mortgage with Bank of America, and I'm just only using Bank of America as an example. And all of a sudden, you close the mortgage with Bank of America, and then 6 months later you're receiving a bill from another company saying, from now on, you're not going to send your payments to Bank of America. We're going to start servicing your loan. So any payments, you should send it out to us. So depending on your situation, you will either contact the lender directly if your lender is still the one who's managing your mortgage. But if not, chances are you're going to have to contact the loan servicer. And how do you know who to call? Well, first thing, try to call the number in your mortgage statement, whatever that number is. It could take you either to your lender or to your loan servicer. And if that is not the right number, they will eventually point you in the direction of someone who can actually help you. Okay, so moving along, the good thing about mortgage forbearance is that you won't have to pay any additional fees. So let's say, for example, usually with a mortgage, right, you have to pay for closing costs, you have to pay for a mortgage origination cost. For this type of assistance, you don't have to pay any additional fees or any additional interest to request the forbearance. Again, you will will still have to pay for the interest in your mortgage. You just won't have to pay for interest to request for the forbearance. And in terms of documentation, I've also heard mixed messages on that end. I've heard people saying that all they did was just to make a phone call and request mortgage forbearance, and that was it. And I've heard other people saying that the banks have requested them to send something in writing to communicate their mortgage forbearance request. And also I have heard of some other lenders requesting proof, right? Proof to show that they are indeed going through a tough time and they're unable to make the mortgage payment. So you will have to reach out to your lenders to find out about what is it that they need in terms of documentation. Now, if you are at this point thinking, yes, this is the only option for me, I cannot go any other route, then before you do that, I want you to take a step back and analyze a couple of key considerations, right? Let's say you do decide to go for the mortgage forbearance, then you will have to ask them, what is it, or how, better said, is it that they expect you to pay the amount that is either unpaid or deferred, right? Are they requesting you to pay a lump sum once the pause or deferment period ends? Or are they asking to pay them a lump sum at the end of the loan term? Those are two different things, right? Having a lump sum pay after the deferment period ends just simply means that after a year or 6 months, you will pay whatever amount of money you didn't pay in one lump sum, right? Or the second option, if they're adding it to the end of the loan term, that means they're going to add it to the end of the 30-year, right? If you have a 30-year mortgage, or at the end of 15 years, in the event that you have a 15-year mortgage. Now, another question that you can ask your lender is whether you can extend your mortgage so that the pause or the deferred payments are added towards the end. So let's say, for example, you have a 30-year mortgage, right? And you either defer or pause the payment for 6 months, right? Can you extend your mortgage so that it is a 30-year plus 6-month mortgage or not? And then if they're giving you an option to do monthly repayments, that will be, a lot easier on you. If they are giving you the option, then how much is the monthly repayment amount? Is it the same? Is it going to be higher? Is it going to be lower, right? So you need to find out about all of that stuff. And most importantly, you have to be aware of scams. I know there are a lot of people out there who are preying on this difficult time. They're taking advantage of the emotional stress that a lot of people are going through to continue to get more money out of them, to steal their identity. Do not fall prey for that. The only people who can help you in mortgage forbearance is only your lender or your mortgage servicer, no one else. So do not fall prey. And that's why you're educating yourself on this. And here is an article for you to check out more information and learn more about the subject. But before we go ahead and check out the article, if you are finding this information useful, please do not forget to hit the like button so that way you can help this episode rank and make this information available to other people out there who are in need of this type of information. And this is the article, and it's an article by the CFPB, and they are the Consumer Financial Protection Bureau. This is an official government site, and I cannot emphasize this enough. There is a lot of wrongful information out there, and that information is not accurate, which creates a lot more confusion. So if you want clarification, you should go straight to the source, and in this case, the government site. So here's a guide to the coronavirus mortgage relief option, and you can definitely check it out here. Just read it at your own discretion. Take advantage of this resource. And even the government here is saying that if you can afford to pay your mortgage, go ahead and pay that. But really, if you cannot, then here is what we can do for you and assist you in this difficult time, right? But once again, if you have the option to pay for it, do so. Otherwise, your mortgage is going to come up to be more expensive than you originally had planned. Now, back to the presentation. You can qualify for both the EIDL and the PPP, but you cannot use the EIDL for the same purpose of the PPP. And one of them, for example, is payroll. You cannot use the money that you've gotten for EIDL to pay for payroll and then use PPP to pay for payroll. Now, moving along to the list, we also have the employee retention credit for employees subject to closure due to COVID-19, and is also known as the employment tax credit. And once again, for those who already have a small business and they are paying for tax roll, you have to, file a tax return every quarter for employment taxes, right? So in this case, you qualify for 50% of qualified wages up to $10,000. That's the equivalent of $5,000 per quarter from March 13 to December 31st. And the credit is used to help you offset employment taxes, right? And for you to be able to be eligible for it, then you have to prove two things, right? That your operations have been suspended by the government. A good example of that is, once again, restaurants or barbershop, which are deemed non-essential businesses, and that there has been a significant decline in your gross receipt, right? Now, you won't be able to qualify for this if you already claim PPP. And this type of assistance is not provided by the SBA. The lender is actually the Treasury via payroll tax. And if you have a small business, you don't have to do anything, because basically every time your payroll company helps you file your employment taxes, that will automatically qualify you if you do qualify for that. Now, let's say you are already working on the CARES Act and that you have already submitted your applications, and now what you're doing, you're just simply waiting for assistance, right? What can you do in the meantime, right? So for those who have Airbnb is actually issuing $240 million to hosts to help them ease the coronavirus cancellation. And the payments, the assistance that they're providing, will be applicable to cancellations that took place between March 14, 2020 and May 31st, 2020. And here's a link to the article that you can go ahead and check out and get access to all the information that you need. Airbnb to pay out $250 million. Feel free to read this out and get more insights into that. Or you can just simply reach out to Airbnb yourself if you are already a host in Airbnb, and find out how they're gonna go ahead and issue you that credit. If that doesn't work, there are other options, right? There are other options out there. One is to collaborate with your tenants to make a win-win situation. I have actually covered that in 2 prior episodes. You can work with them to have a payment plan and also a payback plan. I've actually been working with my Power team, and they have actually created a tenant letter here, and I decided to share that tenant letter with you so that you can use that and make the most out of it, right? And here it is. And here's a letter that you can leverage. Dear tenant, during this trying time in our nation's history, we as a company are facing challenges that none of us had experienced in our lifetime. And then yada yada, you can actually read through this. But then here you're asking for 3 key pieces of documentation, right? So one, you have to verify that in fact they have been laid off. Then you're working with them to get an estimate of what you think they can pay or what they think they can pay per month, and sit down and go over a payment plan to catch up on rent once they're back to work. So again, you are working with them to help them, because it is about making it a win-win situation. They don't want to end up on the street, but at the same time, you're also protecting yourself, because you don't want to foreclose on those properties as well. So feel free to download a copy of this letter and fill it up with your information. You can fill up your entity name, your mailing address, any business email or business phone, and then just, work it out with them. Now, back to the presentation, and here is the link to the video that was priorly released. You can actually take advantage of that video and share that with your tenant as well, so that they can educate themselves into what the options are. And once again, this is all about making it a win-win situation for everybody, not just for you, but at the same time, you also want to help your tenants, because this is a relationship business. Like I mentioned in my prior video, I've had tenants that have stayed with me for over 5 years, and I'm not going to burn that bridge just because they lost their job, which is something that it's, above what they could have done. It's outside of their control. So the goal here is to maintain that relationship and have the ability to empathize and be able to help them as well with it. So feel free to share that video with them, or feel free to watch it yourself so you can help yourself on the individual side of it. Like I said, this information is for anyone who has businesses or whoever is running your rental portfolio or even your flipping business like it is a business. So, and then if that doesn't work, you have the last option, which is to leverage credit cards, right? And I know it sounds very counterintuitive, but once again, let's say you have some savings, you're running out of money, or perhaps you already run out of money. And even though you are applying for all the SBA loans, you're still kind of like on waiting mode, right? Your tenant has been able to work out a payment plan for you, but at the end of the day, that is still not enough to cover all of your mortgage payments. So what do? You need to bridge that difference. You need to be able to access to funds quickly so you can bridge that difference and meet your financial obligations in the meantime while you're waiting for it, right? So I'm going to leave you a link here. And here is the list of credit cards. And the reason why I actually pull these together is because these are all 0%. So that way, even though you're using that money, even though you're getting yourself into more debt, at least you can still meet your financial obligations at a 0%, and you don't have to worry about interest accumulating in the meantime. And then once you're back on your feet, then you can figure out a way to start, covering some of these expenses. And the good thing about credit cards is that some of them allow you to accumulate points that you can definitely use as a cashback to reduce your financial responsibilities with the credit card companies. So, and here's a list of personal credit cards at 0%. You can definitely leverage that. But if you do have a business, one of the greatest benefits to apply for business credit cards at 0% is that you're keeping this debt outside of your FICO, outside of your personal. So you can be qualifying for some of these credit cards. You could be, racking up in debt, and you don't have to worry about your personal FICO score going down. And if that's not enough, let's say you have much larger expenses, then you can definitely work with a company called Fund and Grow. And I'm going to leave you a link to Fund and Grow so that way you can learn more about the services. But basically, in a nutshell, Fund and Grow, it's a done for you services. They help you apply for business credit cards by the bulk. And I've heard of people who have qualified for up to $250,000 in business credit. None of that is going to appear in your personal credit, so you don't have to worry about your score going down in the event that you are using up and start accumulating debt. So I'll leave this up to you, and feel free to actually check it out. Like I said, now that we're back in the presentation, you will have access to this entire presentation. If you want to, just feel free to visit the description box down below and you'll get access to the link, or you can just check out the links individually, which will be made available for you. But I figure you probably will want access to this presentation, so that way you can flip back and forth through these pages as you need, or you can just simply keep rewatching this video as often as you need. And that is pretty much all I have here in this presentation, and I will see you back outside. And that's it. That's all I have for you today. Hopefully this information was very, very valuable for you and helpful. And let me know what your thoughts are. Hopefully I was able to contribute something positive in your life and give you hope to this difficult situation that some of you might be facing. And while I have you here, don't forget to check this episode right here, which is going to complement everything you learned in today's episode. And without further ado, we'll see you next time. Take care. Bye-bye.